Welcome back to Dukascopy TV. I'm Elaine Stenson, and today I'm joined by Roberto Falzoni, who's president and founder with Dukre Asset Management. He's here with me now to discuss hedge fund investment strategy. Roberto, you're very welcome.
Good morning, Elaine. Nice to be back here in Dukascopy TV.
So are alternative investment hedge funds back in favour?
I think that after a very good start of the year for financial markets and all asset classes, June and July we have seen sharp reversal and sharp losses for many funds and for many investments. Hedge funds, as we know, are non-correlated investments and have been performing quite well, and especially they could stand a little bit this reversal. So I think that for the second part of the year, where we anticipate a continuing rising interest rates, uncertainty in how central banks are continuing or not their policy of quantitative easing, especially the US Federal Reserve, I think that alternative investment, in particular hedge funds, are a good asset class to consider.
Okay, and what hedge fund strategies do you prefer at the moment?
Yeah, I think that is very important because, in the last 2, 3, or 4 years since 2008 crisis, hedge funds and funds of hedge fund have been really reduced in client portfolio because of illiquidity, because of maybe not transparency in all the strategies. So let's say that demand from our clients base is more for more liquid strategy, more transparent strategy, probably some vehicles like Luxembourg UCITS funds where you have daily liquidity. So I would rather focus on strategies that have these characteristics. So with quite good liquidity, so not long-term lockups. And probably in terms of strategies, I would stick with the long-short equities and global macro CTAs.
And can you tell me more about the absolute return program that Dukre Asset Management has been running for many years now?
Yes, as Dukre, we are specialists in these fields, and since 2006 we are running an absolute return discretionary strategy. We have a dedicated trading team that has developed over the year a strategy that involving going long and short futures markets. So we are in the most liquid markets, the main market, equity, indices, currencies, interest rates, and sometimes commodities. And I think that this is a strategy that has been working quite well. We can see in the results we had 6 years of positive returns. We started in May in Deutsche Bank Select platform, which is, let's say, one of the biggest, if not the biggest in the world in terms of platform for hedge fund managers. And the characteristics are that we are not a trend following system. Most of CTA's strategies that are operating in these fields are trend following, so they use models, they use the systems, but unfortunately in the last 2-3 years this has not been working. And instead we have these dedicated team that are acting on a short-term basis, entering and exiting the markets or staying out of the market if they have no specific idea. And so I think that these kind of strategies are well adapted to the current situation, where you can have a sharp reversal, and you have to adapt to the situation, adapt the risk management of your strategy to it. So. Okay,
and I just wanted to ask a final word about regulations for hedge funds. That's the new regulations that are being introduced. How do you think that this will affect investment?
Let's say that's why I'm saying that, the vehicles, where people are more and more investing. Of course, probably we're moving a little bit away from what was the old, offshore funds, let's say totally unregulated. And that's why now people, are focusing more on maybe a platform like the one of Deutsche Bank or Lyxor of Société Générale, which are very much regulated and audited by them, or Luxembourg fund UCITS. So where people have the liquidity, there is, let's say, more controls. Of course, not for all the strategy it works. There are some strategies that are more longer term strategies where you need the lockup because you cannot have people that come in or out with their money. If you do mergers or arbitrage, if you buy liquid, portfolio of bonds or securities, you need to be there for enough time to cash in into the investments. So let's say that there are the positive and the negative. I think what is important is that investors are aware where they are putting their money, and that nowadays there is no more safe or absolute safe investment. So the government bonds at 2% that were considered the most safe investment, in the last 2 months, people would have lost 10% of their investment in a 10-year US government bonds. So,
Roberto, thank you for that, and thank you for joining us today.
Thank you, Elaine, to be back here in Dukascopy TV. See you soon.
And that's all we have time for now, but do check back later for further updates and interviews from the Dukascopy TV team. Bye for now.